Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to talk about the quarterly earnings for the Mastercard, which released its first quarter earning for fiscal year 2024 back in May. We are going to see how its earnings compare to its recent quarters, and we will also be going back a year to look at the growth it has been able to achieve year on year. I have been the fan of these two companies, the giant in processing the financial transactions across the world, the MasterCard, and then there is Visa. The MasterCard and Visa both are more or less trading in a similar trajectory after having peaked on a new new record high. We are seeing some consolidation happening, and I think this consolidation is likely to persist for next couple of weeks at the minimum, if not more. And in the short term, if your outlook is just for a couple of sessions or for a couple of weeks, it is better to go with the flow and take advantage of this consolidation which is happening at the moment with a bearish bias. So these are more often consolidation, but the underlying bias in the short term is bearish. So we will have to take that into account and then tailor your trading strategy, whether it is to go for scalping or for the swing trades. You will have to take this reality into account and trade accordingly. We now head to the earnings statement, which we have available on its investors relations page. Let me take you to the first quarter's income statement of the MasterCard. This is the consolidated statement of operations for the MasterCard. If you look at these numbers, the net revenue has risen more than 10 percentage point, where it has gone up to $6.348 billion from $5.748 billion a year back, and that is a remarkable growth figure for any company. And what is more remarkable is the rise in the net income, which is up by more than 20 percentage point. So you see this development. Its top line is up and its bottom line is up. And then if you compare these growth figures, you see that the midline, that is purely my making, this operational efficiency, which can be termed as the everything that comes in between the top line and the bottom line, is functioning quite well. We have this reduction in the expenses of operating the business, and that has translated into this remarkable margin for the company. We don't really have many companies like MasterCard, which are able to report almost half of their revenue as the net income. This is the kind of operating margin, this is the kind of profit margin, which is only one of a kind. We don't really see many companies enjoying this kind of operating margin, net profit margin in the business. But these are two companies which I think can be exploited for the trading and investment decisions. If your outlook is of the long term, then adopting a buy and dips approach is going to be the prudent thing to do. But if you are more concerned with the short term, what is happening today and tomorrow and this week, then I feel the natural choice is going to be to take advantage of the trend, as the trend is your friend, and then go for the trades where there is optimum risk reward ratio in place. For the 3 months ended March 31st, 2024, we saw the MasterCard generating the net income upward of $3 billion, which is up from $2.36 billion a year back. This is pointing to the gains in the way company manages its business. Its administrative expenses and overhead haven't risen much in proportion of the rise in revenues, and that has translated to the gains in the operating margin for the company. The EPS is up to $3.23 from $2.48 a year back. Now, if we consider its cash flow statement, we won't be going into the details of the balance sheet much, as I feel the company's balance sheet is strong enough and it has enough of cash at hand and in other investment where it can meet any contingency, any on ad hoc requirement which might arise in the business. So there is a company which is not really facing any question on its going concern. So we straight away head to the cash flow statement. In the operating activities, it generated US dollars 1.67 of free cash flow. This is the figure in millions. So 1.67 is going to be a $1 billion figure. The figures in billion, and that points to the lower cash generation from the operating activities this time around, even though there has been growth in the top line, simply because there has also been increase in the prepaid expenses, and that has taken away $1.49 billion in comparison to just 761 million a year back. So this increase of around 700 million explains this lower net cash provided by the operating activities. For the investment activity, there was net outflow of $174 million, which is lower in comparison to the last year, where there was outflow of almost 400 million. This time, the purchase of property and equipment is the one of the big item, and also capitalized software has also taken away $221 million. So these are the two big items in the investment activity which have taken away big chunk of cash. For the financing activity, the company has decided to invest in the purchase of treasury stock of almost $2 billion, which is lower in comparison to the purchase of treasury stock, that is investment in the treasury stock a year back. There has also been no proceeds from the issuance of any new debt, so there is this nil figure, whereas last time around there was cash raised by the company of $1.5 billion. Overall, there has been cash outflow of $2.68 billion, as there was also dividend payment of 616 million. And taken together, these three activities have translated into the reduction of the cash and cash equivalents for the MasterCard, as there has been investment in the treasury stock by the company, which is termed as the utilization of cash it is having at hand, the cash which is sitting idle in the company's books. And with this, we are now have seen almost all the key developments on the financial side for the company, and I feel it's doing phenomenally well, which you can simply guess by having a cursory look at the front page of this earnings report and the kind of top line and the bottom line which we have seen in the statement points to the robust business scenario and robust and sound growth in the revenues and net income. Now we turn our gaze to the technical side of the story. In the last couple of weeks, last couple of months, we have seen the continued growth in the stock price valuation of the MasterCard. It peaked at around 490, and from there on, it has corrected of around 10 percentage point. But I still feel it is quite well placed for the long run growth. The company has a business model where almost 40 to 50 percentage point of the revenue comes in as a net income. So in this kind of business scenario, we have to take into account the possibility of continued bull run, and if that is going to happen, we need to position ourselves in such a way that if we get it right, we win big, and if we get it wrong, we don't really lose much. So if we have to consider the trading and investment decisions in different time horizons, I think we will have to look at these price formation independently of each other. In the long run, we have these clear-cut price formation of higher highs and higher lows. So this time around also, there has been this correction, but it is significantly high in comparison to the prior swing lows made back in 2023. So after having this tremendous growth over last few weeks, I feel now the Mastercard stock is entering into a consolidation phase where it might not really decline much or where it might not really rise much, but it is likely to hold its price range and continue to move in a manner which is in consonance with its share price trajectory in different time horizons. In the long run, the price formation remains of higher highs and higher lows. So if it is going to change course, first we will need the confirmation in place, and that is not really coming through in the long term price formation of the MasterCard, as we have this immediate swing low which is significantly high in comparison to the prior swing low. That means we are not really expecting any change in the price trajectory in coming weeks. Now we will go for the different time horizon. There is medium term. If you see the price action after this peak formed around 490, we have this formation of lower lows and lower highs in the medium term, and this points to the quite a significant change in the price formation over long run and in the short term, and that is why I have titled this session as bearishness in the short term, because in the long run the things are still promising on the long side, and that is why I feel you will have to take these decisions independently depending on the time horizon. In the medium term, the price formation is clearly inclined to the bearish side. As long as we have this formation of lower lows and lower highs, we will do well to adopt a scalping approach where we can take into account the possible price move in keeping with the underlying momentum of bearishness. Watch out for the price range closer to 460, 470. If the price moves of the MasterCard are held below this crucial price level, then we will have a high probability that the continuity will prevail and we will have a fresh leg on the lower side, which is going to bring us profit in the medium term. The short term is not really looking much different in the short term as well. The price formation is of lower lows and lower highs. There has been significant jump in the price of the MasterCard from 430 to now 445, but still it has to prove that it is going to change course, and for that it will have to climb past 450, which is the price range closer to the immediate swing low. And if it is able to do that, rise beyond the immediate swing high, then in the next corrective phase, if it is able to hold the prior swing low, then we will be able to say that the risk reward ratio is around the corner. But that's too early to think about right now. The price formation is conducive for short term charting, and with this short term price trajectory, I feel bearishness is going to be much more complementary sentiment for us to profit from. So watch out for the price moves closer to 450, 455, and if there is no significant up move in next few sessions above the 450 mark, I think we will be in need to get ready to fresh leg on the lower side, fresh decline happening in the Mastercard stock on the lower side in coming sessions. So that's it from my side for today's session, where we considered the price formation of the Mastercard on different time horizons. Depending on the time horizon, the trading decisions are also likely to change as we have different price trajectories for different time frames. Now it's time for me to sign off for the day. I'll be back tomorrow with an equally interesting company to work with. See you next time around. Thank you all for joining in. Do subscribe and like the video. Goodbye.